Well, ladies and gentlemen, good morning, good afternoon if you're in the UK, and a very warm welcome to the final day of the British American Business Transatlantic Finance Forum for 2020. Over the next couple of hours, we're going to be looking at the future, specifically at the impact of technology on the financial services industry through the eyes of the disruptors and also of the incumbents. And at 10:30 Eastern Time, 3:30 p.m. UK time, we'll be joined for closing remarks by Mark Tucker, Chairman of HSBC, the UK's largest bank and a great partner of British American Business. So to start the day, I'm thrilled to welcome Husayn Kassai, the co-founder of Onfido, the ID verification specialist, who's going to be talking with Mark Dynes. And Mark is the global co-head of digital delivery and challenger banking at Boston Consulting Group. So thank you both very much for being with us today. And Mark, I'm going to pass it over to you.
Thank you very much, Duncan. Very pleased to be here and welcome everybody. Just a very quick couple of housekeeping rules for us to go through. So everybody in the session is on listen-only mode. So your mics are muted. We do encourage you all to send in questions. We'll try our best to answer them. So if you could please submit your questions through the Q&A feature, which should be located at the bottom of your screen. And you will see the feature hopefully as you hover over the Zoom menu. And also just to note, this session is being recorded and can be shared upon request. So in terms of the session today, we wanted to really cover three distinct parts. So first of all, introduction from Husayn and get him to give us an overview of Onfido. The second part, thoughts from him on where technology and FS could take us over the coming years. And then finally, as I've said, the Q&A, where it gives you an opportunity to ask questions and to get his thoughts and response. So without further ado, let's kick off. Husayn, for the maybe the uninitiated, could you please give us a quick summary of you and on Onfido? What do you do? What's the history of the company, etc.?
Great, thank you, Duncan, and also Mark. It's really good to be on. So we set up with my two co-founders Onfido about 8 years ago, and our focus is around taking your offline identity and anchoring it into a digital account using your government ID and facial biometric. So we power 1,500 businesses, and 3/4 of which are in the financial services space, and I'm one of the co-founders. We started out in the trust marketplace, home sharing, car sharing, on-demand nanny, tutor, cleaners, and so on. And for about 6 years now, we focus on the financial services sector, specifically fintech. When it comes to the key value adds, if you're an online remittance platform, for instance, as you're registering people, given that it's all remote and it's all digital, you need to know that they are who they claim to be. And the way that as sort of the onboarding journey goes, you ask individuals to take a photo of their government ID and show a short recording of their face. Behind the scenes, we're using machine learning to verify that it's a genuine ID, and matching your face to that ID is part of your KYC or know your customer process as you're registering, both at the point of registration, but also on an ongoing basis as authentication. Have the same face on Monday as the same one that registered the previous Monday, for instance. And that is a bit of an overview. We're about 400 people and spread across predominantly the US and the UK, and service 4 of the 5 mainstream banks in the UK and 1 of the top 3 banks, mainstream banks in the US too.
Fantastic. Thanks for that, Husayn. Very comprehensive. Maybe if you could also just shine some light on where Onfido is thinking of going in the coming years.
So we just announced last week we're on track. Basically, we've started the work around IPOing in the coming couple of years. And there is, as I suppose most have read and seen, identity has now become mainstream as a topic. And we are, in essence, a remote identity company in an increasingly remote working world. So there are just a number of new use cases, but more importantly, the proliferation of digitization has meant that institutions across the world, specifically financial service institutions, are accelerating their rate of digitization. And if you want to offer a digital proposition, the first thing you have to do is take your customers from an offline world and anchor them into a digital account, which is where we become relevant.
Perfect. It'd be very interesting, I guess, in coming years to see how you continue that development into a global company. Maybe just as a reminder to everybody to please keep submitting any questions that you have for Husayn via the chat function for the Q&A that comes up later. I know we're going to touch on this in the panel following this fireside chat, but I'd like to maybe get your thoughts now, Husayn. As a co-founder of, I guess, one of the firms leading that forward push of integrating new technology into financial services, how do you think the rise of emerging technologies such as AI, such as machine learning, are changing the way and will change the way that financial services is conducted in the future? And where do you see this going?
So on the one hand, some of the consumer demand and behaviors have been the same throughout history, and there are some that have changed more recently. So the things that have been constant, people want fast service that is at the best rates and at the best quality and so on and so forth, that's more secure and so on and so forth. So it's new technological building blocks that have now enabled us and others to essentially move the progress pillars forward, in essence. There are other behaviors that are more recent. I'll just, in a crude way, put them as the smartphone generation versus sort of previous generations. And the smartphone generation, most of them, from the age of about 10, they've been exposed to some sort of camera-enabled device or a smartphone. They've been used to the Facebook interface, the sort of Twitter interface, and all these different apps that is fundamentally putting the user experience and convenience at the heart of what they do. So when these 10, 12, 13-year-olds or teenagers reach the age where they need to open an account to gain access to financial services, it just becomes alien to them to have to walk down the high street, show paper-based documentation and sign up in a branch, or have to call a call center and explain sort of where they are. Most don't have utility bills. Some don't know what utility bills are. And so what gave rise to your question around the technological building blocks, the smartphone and camera-enabled devices is a key one. Machine learning and AI essentially is helping us and companies like us more effectively detect whether the patterns on the government ID and your face are genuine or fraudulent, better than the human eye. So now you no longer need to have that face-to-face in the bank branch experience. You can do it digitally and online. So not only is it more convenient, it's actually more secure. You got other building blocks, servers becoming accessible, affordable online, so you can set up a company, even a sort of financial services company, with a fraction of the cost that it would normally cost you to set up a bank. You have regulatory infrastructure changes, so you can get licensed just as a remittance platform, as opposed to having to have a full end-to-end banking license. You can just pick a specific vertical that you want to offer your services to. So there's a range of these different improvements and matched to the technological building blocks that have helped this fintech wave. And there are a couple of waves that we can sort of get onto as far as your question on trends, but that's a bit of an overview around how these trends have come in and enabled to create a significant shift in the financial services industry. And we're only just at the starting points, as I know you agree.
I do. Maybe just touching on some of those trends, what do you think some of the major trends over the coming period might look like and how they might develop the market? So
there is the consumer behavior trends, and then there's technological trends and so on. Consumer behavior have always been the same. It's now being able to serve them more effectively. And convenience, I'd say, is the number one factor in that. Like the Amazon one-click experience is going to push itself to every industry. There's technological innovation, some of the ones we've talked about, but the ability to use data to offer more personalized, maybe even hyper-personalized services is another thing. And as for, we've had startups and scale-ups offering fintech financial fintech services. And fintech for me is sort of, we've always had technology and finance. Just the difference with fintech is utilizing technology and putting the customer experience first to be able to do more with less, powered by RegTech in essence, which is again, complying with the regulation with fewer resources or in a leaner way, in essence. That's like the key innovation, you could say, because ATMs use technology, right? Sort of many decades ago. Now, so you had the startups and scale-ups getting into offering financial services. You then had mainstream banks offering financial services, either buying neobanks or spinning up the digital banks and so on. You now have larger or investment banks getting into the space, and you have big tech getting into finance. So there's on a broad range. Now, the recognition and the value, the core competence of the big tech isn't just the distribution that they have at Facebook, Apple, or Amazon and others. It's actually their ability to use data very effectively that I think makes them potentially very competitive. So, and that what is potentially this hyper-personalization trend that we may see in the future. But broadly speaking, if I were in a very simplified way, in my view, if there's like three trends, the first fintech wave was about convenience. Let's just make this a much more convenient service. Customer need at the heart of everything that we do. That was predominantly geared to those who are already banked, already have a bank, and now they want a second one, a cooler one, whatever it may be. The second wave, in my view, is more around those who have not had access to financial services in the past and now are able to. It's the bottom of the pyramid. And financial services is a very broad church and many different verticals doing many different things across many different geographies. But broadly speaking, as far as the number of new technology-driven scale-ups and startups coming to offer services, convenience, the bottom of the pyramid. Next is likely, in my view, to be more personalization around offering personalized services, having everything under one roof. You know, we see that trend around neobanks, unbundling what the mainstream banks did, doing something really well, starting with a prepaid card, then adding credit card, then adding lending, then adding crypto exchanges and so on, remittance and so on. And now they're rebundling and offering that service, end-to-end banking service. So broadly speaking, user experience and convenience first. More recently, there's been a trend around the unbanked and underbanked, or just extending financial services to those who had fewer financial services. And third is this more personalization approach that I can see is sort of on the horizon.
Yeah, perfect. And maybe just building on that, so in terms of how you think the financial services ecosystem will look in 5 years' time, how do you think it will look different than it does today?
So I believe it's going to change because the banking industry has not really had innovation for centuries. I think that of the things that have become clear to more and more of the industry is, in essence, the difference between the smartphone generation and what they think about value and what the previous generations did. So the previous generations looked at a bank and like the value from how old it is, how big its assets book are, how many branches it has, and so on and so forth. And the trust came from the prestige and the history. And that means you're in a protected space as a bank. It's hard to have a competitor that also has a 200-year history because history takes time. Whereas the smartphone generation, and I'm generalizing, and there are a lot of assumptions here, but on balance, the smartphone generation just couldn't care less. They want to know how easy is the app to use, how cool does it appear. They don't care what your assets are. They don't even know what assets are. They want to know if you go offline for 5 minutes, are you going to be transparent and email me, apologize, and have that personal, sort of experience? So the trust and the definition and the convenience, that's what the new generation of customers are associating with value. So if you extend that to the future, if these assumptions are in fact true, when you bring big tech into the equation, and I'm talking Apple, Amazon, Google, Facebook, and so on, they kind of have the distribution that the banks do, but the fintechs don't yet. They're relatively small in the grand scheme of things, but the big tech do. They bring the data components that the fintechs are good at, but the banks aren't yet. And they bring this ability to innovate, customize, and sort of personalize and so on. So in 5 or 10 years, I think if big tech are able to, everyone knows that they've already started in financial services, they're just looking to expand that. That's going to make a material shift in how we view finance. And there's questions of power and control and regulation, which is, I think, is going to continue to be quite topical.
Yeah, perfect. And I guess, given your kind of comments on ecosystems and how they might develop, and I guess working together with different third parties. Could you maybe just talk a little bit about how Onfido thinks about partnerships and about building partnership networks?
Of course. So I will start a little bit about our customers and then us. Our customers, it's partnerships is just a way of thinking. It depends where the value comes from. So if the value is how big your company is or how much tech stack you have, then you build everything in-house, which might sound familiar, right? Whereas if the value is what does a customer want, what's the most convenient way to deliver that, the fintech ecosystem are partnering. The Monzo and TransferWise, for instance, for remittance, just plug the API in and run. That's why they're quite quickly able to offer the fintechs a range of different services at high quality and essentially give what customers want. But mainstream banks are increasingly partnering, and that's sort of a trend that is a positive one. Us, ourselves, we have a large partnership program, and the key ways is to become relevant to the larger enterprises. So Okta, ForgeRock, Transmit, and others. It's partnerships is sort of a very key part of what we do. Microsoft and Salesforce have both invested. And in essence, as long as you're able to mutually add greater value to the end customer, is something that we're going to pursue and continue doing.
Yeah, perfect. So maybe just building on that. So early this week, Jez Staley, who's a group chief executive of Barclays, when he was asked about emerging technologies in financial services, he said, anyone who's involved in business, commerce, finance, has got to be both tremendously energized by what technology may hold for all of us, and also terrified at the same time. I guess that's obviously speaking from his view as a leader of a major incumbent financial services institution. Be good just to get your thoughts on the idea of technology developments and what tremendous potential and power they hold, but are there also terrifying risks? You can take your perspective on that.
I completely agree with what he said, and Ashok would, I'm sure, say something very similar. The recognition ought to be that through the many decades, large banks have just assumed that customers won't switch, and that the value comes from the data that they hold, and that the data belongs to the banks. Now, what has happened is that open banking and other approaches have meant that consumers now own their data, so that value driver is gone. The history and your assets and so on, they don't offer a unique value proposition to the market, because the new customers, smartphone generation, who are in the long term going to become the main customer base, they don't, in essence, care about that anywhere near as much as the previous generations have done. And so, and a number of other factors, these are the main ones. And actually competition now being a lot more open, in that a fintech, a team of 12 can get a license to offer a remittance or something like payments, a service, and within a year be up and running in as a new competitor. Normally, it'd be very tough to compete with a bank, but you can do it with a dozen people over 1 year. And investment capital is sort of plentiful. So when you consider all these dynamics, there is a recognition of, okay, as a bank now, what should be our strategy? What should we do? And Barclays is naturally a leader in this as an innovator. Although the eye is more around the startup ecosystem, for me, like it's the big tech for the reasons I mentioned, that offer the material competition or something to be mindful of, in essence, because it's having the data and the customer relationships is one thing, which the banks do, but utilizing that data effectively to deliver valuable goods is something the banks have not done well at all, and it's the core competence of big tech. And so the banks have a period of time to be able to use customer data, offer them the services that they're asking for, and essentially build more trust, and also implement services and tools to improve the customer experience, so that when big tech comes in a big way, the banks are able to remain competitive with them.
So if you were CEO of a large bank, would you be worried about the fintech startups, or would you think that you could change your bank quickly enough that you could be able to respond to the competitive threats of those newer startup players?
So as a big bank, I would, as it stands right now, it would be an uphill struggle, but it'd be very doable. And if I recognize in the next 5 or 10 years what's going to happen, I'm going to very quickly focus on my infrastructure needing to be replaced in most part, depending on where you are, right? This is what BBVA started more than 10 years ago. It's around what infrastructure do we need and where do we need to partner and so on and so forth to be agile in this world that, innovation happened once every 2 decades and now it's happening every 2 years. How are we able to be more agile as a bank, but recognizing that, fintechs, and despite the noise in the press, it all accounts for sub 1% of all the activity still, right, globally. So the main change hasn't happened, but the trends there are signs of things to come, and finance will look radically different in the next 5 to 10 years. My personal identity view is that banks, in fact, hold a lot of trust, regardless of what, in my view, you read in the press. Like, where do we put our money when we get paid by our employer? Like, banks actually hold a lot of trust in society. They anchor trust in society in some ways. When you go to your landlord, they want to see your bank statement as a proof of your identity over everything else. So there's a role for, in my view, banks to play in becoming that trust anchor and helping consumers who have that long banking relationship take and prove and provision access to other organizations because of the sheer fact that they have this long-standing relationship with their bank.
Yeah, perfect. I know in a few of the earlier sessions in the conference, several of the government leaders and regulators have touched on fintech as a key area for more US and UK collaboration. However, I guess the US regulatory environment for fintech is still a little way behind compared to the UK. As a firm that kind of spans both the US and UK, what lessons do you think the US could learn from the UK in terms of making the regulatory environment friendlier for the fintech sector to grow? And also, maybe just a secondary question. So what more could the UK and US governments do to further enhance that fintech environment and cross-border collaboration?
So on the second question first, what could many countries across the world are learning a lot from our FCA, Financial Conduct Authority. I think it's one of the UK's best exports. And there's certainly many events and meetings between the US regulators and the UK ones, but that can be improved for sure. And that extends to your first question, and more generally, there are benefits in some form of centralization. The number of different regulators in the US, state level, federal level, and so on, does slow things down. So with this ability to have more of a coherent strategy and plan that's consistent across different states, so that expanding from one state to another should not be as though you're expanding from one country to another, firstly. And secondly, what the FCA has done with its regulatory sandbox and a range of different initiatives has now started to happen in the US. I'm aware of actually quite a few that either have happened or are about to, and they're all good signs, because you want the regulators to be in frequent contact with the latest innovation, latest technology, so that they can serve their purpose better. And their purpose is to encourage customers getting better access to new services while stopping malpractice. And with this iterative learning, you can do that.
Yeah, perfect. I'm gonna head over to the questions now, Husayn. We'll see how many of these we can get through. I'll take them in the order in which they came in. So, from the perspective of obviously the countries in which you operate, which country do you think is leading in terms of fintech uptake, and maybe some reasons why?
So fintech uptake, it depends how you define that, but Singapore and the UK are at the forefront, most certainly, and Germany is right at the end. The German regulator, BaFin, their objective is to stop customer malpractice or financial abuse. That's a very laudable, very good thing. But you can achieve that by stopping all innovation, right? There has to be a balance. Ensuring that there's innovation and competition, as the UK FCA and many of the financial regulators have, while stopping malpractice.
Yeah, perfect. One of the other questions is about data privacy issues and how Onfido embraces data privacy issues, and whether or not you see a particular difference between an approach and a demand for it in the US versus the UK.
So we've made it into a bit of a core competence because we work with the ICO, the Information Commissioner's Office, which is the largest privacy regulator in the world. We actually were part of the first privacy sandbox. And in essence, so one is close collaboration, helping them understand what machine learning is, how it works, and in turn learning about changes and ideas and so on. And the privacy point is consumers, and there's this misunderstanding that consumers don't want organizations to hold data and things of that nature. That is perhaps partially true, but what consumers like them, consumers understand that your health practice or your local hospital are going to need your health data. Your bank is going to have to hold your identifiable information and for regulatory purposes. They're very okay with that. What they don't like is abuse of that data. And so a transparent privacy policy and everything else really talks to that. And I think that's relevant both in the UK and in the US.
And I'm going to take a little bit of liberty and not do this next one in order, but how close do you think we are to establishing a digital identity framework for cross-border value exchange?
So we are making progress and we're headed in the right direction. There have been a few hiccups, it's 3 steps forward and maybe 1 or 2 steps back. But I can speak to at least the UK with more of a centralized digital identity unit. There's frameworks that are now being developed as consultative approach and consultations happening and so on. So what is transpired is that across the government departments, identity is priority number 3 or 4 across them all, but in aggregate, it's like priority 1 or 2. And so the trends are positive. In my view, it's the next 3 to 5 years is what I'm hopeful we'll see this cross-border interoperability. And
maybe just a final question. One of the questions we have in the chat is obviously one of the big competencies of the traditional banks is dealing with regulatory compliance. Do you think this is going to continue to be a barrier to scaling up for startups and scaling those business up in the future?
So it's a legitimate question. So when you talk to chief executives and others at like mainstream banks, or in the last few years, they've kind of said, we have a much tougher regulatory regime and compliance requirements compared to the startups, and therefore this is hampering our ability to innovate and so on. Some of that there's some of that is the case, but over time, the bar has been raised for scale-ups and fintechs and others to basically be not too dissimilar from mainstream banks. It's just the case that the infrastructure used by startups and scale-ups are much more streamlined, much more agile, much more sort of auditable and so on, so that they're designed to scale. And so now they're able to better comply with these requirements, whereas mainstream institutions that are human labor heavy, old infrastructure heavy, and so on and so forth. And so it goes back to the point around there needs to be some infrastructure change at the mainstream banks in order to help them comply with those. And the birth of the fintechs has led to a birth of regtechs that are helping the fintechs like us, CompliAdvantage, Featurespace, and others. And tools like ours are now being adopted by the mainstream banks to help them become more lean and effective and scalable when it comes to them also being compliant.
Husayn, I feel like we could have talked for a lot longer, but maybe I'll just take this opportunity for you to give some final closing thoughts before we hand back.
Absolutely. So it's really good to be on, and I genuinely see financial services as this perhaps being one of the most exciting times in the last few centuries, in that competition, innovation, technology is all sort of coming together to help set apart those who are able to deliver long-term value for customers versus those who are not. And regardless of the press, news, whatever it may seem, mainstream banks have got very long established trust relationships with their consumers. They're sitting out a lot of data and they have the ability to do a ton. So there are amazing lessons that can be learned from the fintech ecosystem, as well as big tech, and bringing the benefits of both the agility and the customer experience here from the fintechs, and also the ability to use data effectively, as well as the customer experience and so on from the big techs, so that banks can start now. They've started already, but to accelerate their ability to become future-proof, because otherwise these other external sort of parties are going to increasingly play a bigger role. And that is something that is both exciting and interesting.
Husayn, thank you very much for taking the time to speak with us today. Really insightful, really enjoyed that. So thank you very much indeed. I'm going to hand back now to Tamara Ecker, the Managing Director of BAB, just to introduce the next session.